We talked with David Seeger last hour, and we are now going to have a segment called Money Monday. And David is the president and CEO of Great Lakes Credit Union. Thank you so much for joining us today, David.
Thank you for having me.
Now, it's nice to have you here because I don't know, most people out there are not, unless you're in the business, you probably you're not very financially savvy when it comes to reading reports and seeing the market numbers. It's kind of like, what does all that mean? I know I personally, that's how I am. So it's nice to have you here to break things down. Now, let's talk a little bit more. First of all, you had mentioned during the break where the market started today.
Well, the overnight markets in Asia and Europe are down. And it looks like the futures for our own markets, for the New York Stock Exchange, is going to open about 74 points down right now at 9:30. So that's what the futures are predicting right now.
Very interesting. Now, and again, if you're just waking up as well, the numbers from Friday that came out, not very promising.
Not good at all. In fact, we're hoping for something better. In fact, the market was hoping for 100,000 jobs to be created during the month of June. It came in at 80,000. And that put the market into a tailspin as well. It dropped at one point 192 points. It recovered to a negative 124 by the end of the day, but nonetheless, it was a shock to the market as well.
Right, they've been expecting gains for the past 3 months, and we keep getting disappointing numbers, and the revisions don't seem to be any better.
That's correct. The first quarter of this year was pretty good. It looked like we're heading off for a pretty good year, pretty good start. This last quarter is sending some messages of a change in terms of slowing down of the recovery, not where it was the first quarter.
Whenever we hear these numbers, it comes out as surprising numbers. Are they really surprising?
Well, to a certain extent, as much as we were looking at something more like the market was looking for 100,000, came in at 80. That isn't very much, but to the market, that is fairly significant.
Right.
Now let's talk about employers. Of course, there's so many people out there looking for jobs, and employers, I mean, they're just not hiring. And you had mentioned before that instead of adding jobs, they're just adding work onto the people who are already there.
Exactly. At the report last Friday from the Department of Labor, it indicated for the month of June, the average work week increased by 1.1 hours, indicating that instead of adding new employees, what employers are doing, they are just giving more work to their current employees and
cracking the whip.
Thereabouts. That's right.
Right.
Wow. So what's the toughest thing right now about your job? Your entire job is financial, and you're just looking at things on a daily basis. I mean, the numbers come out Friday. What's the first thing that you think?
I think about in terms of demand, in terms of people wanting to borrow money, get new homes, things of that nature. They're afraid to do so with these type of numbers. The demand is relatively soft, and there's plenty of liquidity out there, but there's plenty of money out there. But the point of the matter is people don't want to take it.
That's businesses that are just uncertain about their future, about what's going to be foisted on them next as far as regulations and policies, things like that, right?
And all this stuff has not been decided yet. If it was to be decided, and if the politicians in Washington could come to some conclusions, some things, good, bad, or otherwise, there would be at least some direction, and that'll take some of the uncertainty out of the market.
A federal budget would help, wouldn't it?
Very much so.
Let's hope we get one.
Right.